Welcome to the topic on bank reconciliation. So why do we need to reconcile our bank statement with our cash book? So for things like unpresented checks or checks that hasn't been credited yet, inside our bank statement, they may not reflect it. Okay. However, our cash book would have recorded it. There are some other items that the business, our cash book, did not record. However, our bank statement would have recorded, such as direct payment and deposit into our bank account, bank charges or interest expense, bank interest income, or checks that are dishonored. Okay, things that the business wouldn't have known if they didn't check their bank statements. Okay, so now we look at a typical kind of bank reconciliation question. Normally the first part of the question, they will ask you to update your cash book first. Then you do a bank reconciliation. So how do we update our cash book? First, we will use the figure that the cash book has, which is the 232 credit. So if it is a credit balance, shows that it is actually a bank overdraft. So therefore, it's a credit instead of a debit. So now we try to update our cash book. We have a cash at bank account in our cash book, and we'll bring forward the balance, which is balance BD, with a balance of 232 credit. So how do we actually update our cash book? Is that we will look at what is actually written in our bank statement but not reflected in our cash book. So we could look out for things like bank charges, direct deposits, direct withdrawals, etc. Okay, so first step is that before we actually look at all these, we will try to investigate our starting balances. And we realize that, the starting balances are different. Okay, our cash book reflects a 1,000 debit, whereas our bank statement reflects a 1,200 credit. Okay, first thing we need to note is that when a bank statement writes credit, is from a point of view of a bank. They are actually owing us money. So we are the liabilities, that's why it's written as credit. However, in our cash book, from the business point of view, it's actually a debit. So if there's a $200 difference, it actually shows that probably, previous month's withdrawal of $200 is captured in this month's bank statement. Okay, so our cash book has already updated that in the previous month. Okay, we do not need to update that $200 withdrawal anymore because it has been updated in the previous month already. So if let's say last month's cash book has already been updated, it's our bank statement that hasn't updated that $200, we will need to update this month's cash book again. Okay, so therefore, we do not update our cash book with that withdrawal of $200. Next, we try to compare our bank statement again, and we try to look at our cash book. And we realize that in our bank statement, there is a $660 withdrawal. On the other hand, in our cash book is actually $606 credit. Okay, there is a difference of $54. So what happened is that the accountant actually recorded wrongly in our cash book, whereas our bank statement reflected the correct withdrawal. So we have to update our cash book, the extra $54 of withdrawal. In order to capture more withdrawal, to update our cash book, we will credit cash at bank $54, giving us a balance of 286 credit. Next, we try to look at what other things that are reflected in our bank statements that are not reflected in our cash at bank. We realize that there is actually a direct transfer of a deposit from our trade receivable Joey push card, a deposit of $500 that hasn't been updated in our cash book. Okay, to update our cash book with this deposit, we will then debit cash at bank, giving us a balance of 214 debit. And because it's from our Joey push card, our trade receivable, that would then be our particular. Now we look at our bank statement. Okay, we realize that there's a standing order of rental expense, which means that there is a direct withdrawal of $700 from our bank account to pay off our rental expense. This is not captured in our cash book, so we have to update this in our cash book. So in order to capture this withdrawal, we will credit cash at bank $700, giving us a balance of $486 credit. Okay, this is actually rental expense, so therefore our particulars will write rental expense. And then we see that there is actually a check deposit that was actually rejected. There's a withdrawal of $500 then. Okay, because this is a dishonored check, and we have to capture this dishonored check, this so-called withdrawal, in our cash book as well. So in order to update our cash book, this reduction in our cash at bank, we will credit our cash at bank $500, giving us a balance of 986 credit. Okay, this is because of our trade receivable Weixiang provisions. That's why we write it in our particulars. And this is actually a dishonored check. Okay, and then we go back to look at our bank statement again. There's a withdrawal of $40 due to bank charges, and this hasn't been captured in our cash book. So to update our cash book, we will then credit $40 for our bank charges expense, and we'll give you a final balance of 1,026 credit. It means to say there is a bank overdraft of 1,026.